Hi, my name is Harry Haas, Sniper Trader 21 on Twitter, and today I'm just going to talk a little bit about the first bounce strategy. I've had some success with it over the past couple months, and I thought I'd kind of pass on some of that information. Before we begin, I'm not a licensed broker or advisor. I'm not licensed at all. I'm purely an amateur at this game. Um, this isn't investment advice, so don't take it as such. I'm just purely stating my opinions and how I view the market right now. So for the first bounce criteria, what I'm looking for is a low float, higher institutional, higher insider ownership, and higher institutional ownership. I like the stock above VWAP. Usually it's the hot chick of the day. Usually it's the biggest percent gapper on the day. And usually it has no dilution or very minimal, or the company can't dilute. I know there are other fundamental videos. I'm just going over the first bounce, so I'm not going to get into it too much. These are just some general rules of thumb that I have going into the market every day. Trade like you're a retired trader. So you don't need to trade every day. Like if there's no first bounces, well, I'm not going to go out and look for a first bounce if the setup just isn't there. And I think a lot of people get caught up in that little trap where they feel like they have to make money every single day. There's been like 2 or 3 days where I haven't gone out and traded because the market was completely dead. And there was no setups that I liked, so I went out and enjoyed my day instead of just sticking to the screens looking for something that isn't going to show up and forcing trades. Always trade the best setups. The first bounce is an easy and extremely easy way to grow your account. It's an easy setup. It's great to learn. I learned it from the LIC YouTube channel, and I tested it. I went over it, I practiced it, and now I'm using it in the market right now with a live account. There's also no locate fees with it, so if you're trying to grow a smaller account, sometimes those fees can really hold you down. So not having to pay those locate fees and still make money is great. And another rule of thumb I have is if you're in the money and you're up like 10-20 cents a share, it's always a good idea to set it to break even. That way you don't turn a winner into a loser. That's just my rule of thumb. You can trade however you want. So entry using first bounce pattern. So I personally like to enter on a support or resistance line. I'm using a line chart plus a candlestick chart. I'm making sure the tape isn't too heavy. And when I mean heavy, I mean I'm making sure there's not a lot of big sellers going into my line. But if there are a lot of big sellers and my line is supporting that, then maybe that makes my line a line of interest. What I'm trying to say is that I don't want the tape to go and break through my line with authority. If my line's at 160, I don't want it to be trading at 153. That's just not what I like to see. I don't like to see the tape go through my line at all. I like to see my line steady and sturdy, and I don't like to see it broken. And we'll get into some examples of that later. I like to scale into my trades, which means if I have, let's say, 1,000 share position, I might do 250 shares 4 times, scaling down into that trade. And I also like to preset my orders. I do preset starters, but it's always a good idea to gauge the tape and how the stock's trading. And I like to combine VWAP with some of my indicators. I really like that. When you have multiple indicators that point to one line, that just gives you more conviction in the trade. Another thing that is good to do is to build a core. So building a core, I know Bao has talked about that in other videos. I'm not going to get into that too much. If you watch the MIC YouTube channel, you've seen that he's talked about building a core. So another thing is just be patient when you're trading this setup. This setup requires a ton of patience, and that's something that I really had to learn when I started trading this this setup. Is that I really needed to be patient. It doesn't just go down, hit your line, come back up, you make 30 cents. Sometimes it can take 1 or 2 or 3 minutes for your line to really become a support. And sometimes those 2 or 3 minutes feel like hours. But one thing that I've always done is just sold into those spikes, selling into that resistance. And I get this question probably 10, 20 times a day. Do I use hotkeys? No, I do not use any hotkeys of any kind. I just never have. I've kind of experimented with them, but it's just not something that I like to use. So now we have the first bounce pattern. So in this example, the stock shoots way up. This can be however much you want, and then it comes down, and then it usually bases off a support, like in this example, and shoots back up. So you're looking to buy on this line, and you're looking to sell into this spike. Here we see a little bit of resistance, so I'll put a line right there. The stock spikes, creates this resistance, comes down, spikes back up, and then this support is being used as resistance. Here we just see another example. I see these all the time of stocks having resistance, breaking the resistance, and coming down and using that resistance as support. This is another one where it'll just come up, and sometimes the stock will spike, it'll fade for some of the day and not do anything, and then we'll get a late day spike, VWAP reclaim, and then it'll come back down and use this support as some resistance. Here's the setup actually in use. So if we go back here, this setup right here, this is actually it. So we see that in this particular scenario, I did know some people who were short on this and trapped, and I kind of felt bad for them. But a lot of people were risking off of this pre-market high. So when this stock started to kind of come up, it shot up, stopped out all of the shorts, and then there was a little bit of a sell-off from these longs, and it came down and use this resistance as support, and we got this little bounce here, and then off it faded off. But this little bounce, this is 15 cents a share. If you know how to spot these, there's 2, 3, 4 of these a day. You can be making up to $1 a share just on scalping these little first bounces. This is an easy pattern to use, and it's profitable. So here, this is a little bit of a complicated scenario about how I use the line chart. So when I'm using the line chart, I'm looking at these little niches that are formed right there. Here we have a niche right here. The stock kind of comes up, it forms another niche, and then comes up. You can't really see on this chart, but I will bring up the candlestick of how I traded it. And we see this little niche here, and the stock comes down, and it actually faded down to this niche and rebounded off. It doesn't show it on the line chart, but it actually came down and rebounded off. And that was what I was looking for the first bounce. And so when I mean that I'm incorporating line charts with candlestick charts, I'm looking for the stock to kind of come up, fade, and rest on this little support, and then keep trucking back up. And that's exactly what we got right here today. This is a Dare. I traded this stock today. I bought it at $2. I sold sold all my position at $3.20. So here I was watching this little niche right here, this little area, and it came down. It hit that line right there. I was a little bit late on it. But I managed to make up for it and buy it right here at around $2. And then as the stock started selling, while I was using this for a profit target, I sold a little bit. It came down, kept spiking. And then I used the first bounce strategy again on VWAP. And this is a little bit more of a complex way to do it. It's not necessarily a way that Bao teaches it, but but I am always watching the tape around VWAP to see if it will support. 250 level is usually kind of a mental resistance as well. I was looking at this kind of little cluster back here. It came down, used VWAP as support, and I bought, I sold, and then I used actually a second VWAP as support again. Looking into these kind of lines, it actually rebounded off of this line right here. And then it came down and popped back up. So this was really easy money. If we look back here, you can actually see that here there were those lines, and when it came back up here, it actually used this as a line. So I'm using the line chart, I'm using the candlestick chart to give me kind of some inside information as to where the stock will land. You can't necessarily see this as easy on a candlestick chart. If you're new, this can really help you. Seeing this niche right here, that can really help you, because that niche is now on the candlestick chart, and now you can be more exact and say, okay, the high was, let's say, 1.97. The low here was 1.97. Pretty good indication that you can use that line. Now, if that dips below and goes to like 1.95, then I'm probably not going to be as interested in that line, and I might even look to go and scale in at a lower line here. But basically, the stock runs up, has a pullback, goes on to resistance, and then keeps on trucking up. And here, I use that exact line again, actually, later in the day. So this line was pretty much a line all day. When the stock came back down, I also bought on that line too. And you can see right here, 9:58 a.m. I said 1.93, let's see. It actually didn't go and hit 1.93, it hit 1.95, and I was off by 2 cents. But I still had some orders in, and one order got hit, and I sold into the spike, and that was a quick 20 cents a share gain in less than 2 minutes. So again, just recapping, I'm looking at the stock going up, I'm looking for a fade, I'm looking to buy into these lines, I buy into these lines, and I sell into a spike. This pattern was a little bit more complicated, and was using some other strategies that I was using. It's kind of an accumulation strategy that I look at, where the stock kind of accumulates here and then they push the stock up. Kind of a theme in the market this week was that they take weak stocks like SLNO, and there was another one that they took, and it made it look weak to kind of trap short sellers, and then the stock went parabolic. So I actually bought some around the $2 level here again, and I sold into the 4.5, 4.6 range. So that's easily a 100% gain. It was a really nice trade. But here again, if you look, the rest of my entries, other than the two down here, are all on first bounce. This one I sold. I bought some more right here at the $3 level using this line right here, combining the line and the candlestick chart. I was kind of patient with it. I let it run. I said, you know what, I'm already up a little bit. I had a stop underneath here. If it had a broken, it didn't. And it came back up. I sold into this spike. Then I waited for another washout. I used this little cluster. It was the same type of niche on the line chart as we saw before. Bought, sold. Then I saw another line right in here, and I said, okay, I can buy a little bit more. Bought a little bit more and sold into this. So this was a 100% gain right here. And just recycling here, just knowing when to be patient. I'm not going to buy right here because for me, I didn't really see the risk-reward opportunity. But when it came down and we got this big washout candle, I really saw that there was a potential for a bounce. Sometimes you can see that the stock will kind of fake you out a little bit. So like here, I know some people tried to buy on this first bounce and go up. What we're really looking for is a nice, clean washout, a clear kind of wash. So here we got a nice little wash. Here we got a nice little wash, and those are things that I will always look for. Here in ATOS, I made $1 a share, just scalping off this 4.5 line. I really like this line. It was pretty good. I scalped off 4.5, then I used this line. Again, it was a first bounce. I was looking at the line chart. I saw that there was an interest around 4.5. The stock came up. It washed all the way out. I bought it. And then I just sold into the pops. And then it washed out again. I bought a little bit more into these lines. And I sold into the pops. Washed out again. Sold right into the pops. But the key main thing, and I find a lot of people struggle with this, is that you need to wait for it to really wash out. Like here, you could have bought the stock. I was kind of looking for it lower. It didn't get any lower, and 4.5 was kind of holding. So you could have used this line and bought there. I was really hoping that the stock would go lower and try and push higher. And it did go a bit lower, but not as low as I wanted it to. So the stock came down, and then I just sold into the spikes here. This is a great example of a first bounce strategy because it's not a runner. It's kind of 10:30. Most people are packing up for the day, or going to get some breakfast or lunch and coming back for the afternoon session. This one, again, the stock ran up. It got a little bit exhausted around this 2.3 area. It was coming down. A little bit of longs kind of got bagged. I'm guessing some longs got bagged, but they weren't too bagged because it's still above VWAP. And it just came down. It gave us a little dip. I was just looking to buy on VWAP. I knew that one of these lines would support. It was an area of interest on the chart for me. So I was looking at all of these lines, and then stock came down. I bought it on VWAP and just sold into that pop. And another big thing is that I'm not using one bullet. Like if the stock had a broken VWAP and went down here, I would have been able to scale in more because I'm not using 100% full size. I'm using smaller parts of my size. So if it keeps going down and it goes down to the 1.9 level, even if it went down to the 1.8 level, I'm still secured that if the stock goes down and then bounces back up, that I have shares ready and I'm prepared for those levels always. I'm never saying, oh, it's going to hold VWAP and it's going to go, parabolic. It could break VWAP. I would look to scale in on some of these lines and start using a little bit more size, but instead I just got VWAP and it went to the top. I mean, I'm not going to complain about making money, but I would have liked to see it go down a little bit lower. It just happened to be how that setup was. Here we go, another one. Same type of scenario. Stock kind of getting overextended, getting tired out at the 2.45 level, coming back down to VWAP. I was actually using these lines over here. So I had these lines drawn. This line did not hold. This line did not hold, and this line ended up holding. I bought right here, and then I was kind of patient, and I sold into this 2.6 level right there, and it was a decent gainer. Like I'm never going to complain, and especially on such an easy strategy like this. Like this is pretty much free money. I could teach my little brother, I could teach my little sister how to do these every day consistently, and they would consistently make money. Because this strategy is so easy, underrated, and no one is using it at all in the market. Here we go, another one. So this one is exactly like one of the diagrams that I drew out back there. I'm looking for that spike. It comes down a little bit. This isn't overextended enough for me to look for a bounce here. I was really looking for the extension up to 30 cents here. Then I bought it at 27. This kind of sounds pathetic. This was a day that not a lot of things were running, and I know I say in my rules that I should really stick to not trading, but I saw this line here and I went ahead and took it. on this resistance. Resistance became support. I sold into the spike. I was hoping it would go a bit higher, but we didn't see that, so I didn't end up doing it. This one is also, it's a first bounce, but it's more of a VWAP bounce. I didn't know how this one would really go. I just saw that we were getting some volume in. I saw that we were starting to trade. It kind of washed out down to these levels. The tape was kind of supporting it. I went in, took a buy on this washout, and then sold at the very top. This one I did not trade, but I did screenshot it on Twitter for some people just to know how that it can also be used late day. So here we get this overextension all the way up, and then it comes down, fades down, hits our line at, I had a line drawn at 3, I had a line drawn at 305. If this 305 didn't hold though, then I would be looking for $3, I'd be looking for 2.95 level. If you see here again, it only broke my line by about a cent or two. And that's what I really want to see on the tape. I don't want to see my line broken by more than a cent or two. You see right here? This is what I like. It's exact. I can say if it's broken on the tape by more than 2 cents, I am not going to trade it, and I will wait till the $3 mark. If this had have been broken, it would have went to the $3 mark, and then this would have rebounded up. So that's what I'm always looking for. I'll be patient enough. I will wait for $3. If $3 doesn't support, then I'll say, okay, 9.5, and then if 9.5 doesn't support, then I'm probably not even going to long the stock. Here we go again. This is SBOT. I traded this one. Here we go again. We got some overextension, some pullback. I actually bought it on this line, right on VWAP, and then I just sold into the spikes. I bought it $2.30 something cents a share, sold it $2.80 a share. I mean, this is very, very, very easy money if you know what to look for and you train yourself to see these overextensions. They come down and then they come back up. It's above VWAP all the time, and we're always seeing this kind of stair step. I think it's a lot of people in their heads think that stocks will just go straight up, kind of like this, but stocks need to take a breathing room. Shares need to be exchanged, and here we see some beautiful, beautiful overextension coming back down. And I'm sure if I was short, I'd be looking to kind of short into this pop, depending on what's going on, what the circumstances are. But instead, I'm buying the dip and selling. Buying the dip, it works. Here we go again. This was actually one where it's a good example of me setting my stop to break even. So kind of last week, the week before, we were having this pattern of where stocks would spike, we'd get a pullback, and then they'd go up. But this stock just dumped right away. But this is a great example of me setting a stop to break even, recognizing on the tape that it could not push higher. It was trying to break that $4 level. It couldn't get above it. So I just started selling, and I sold all my shares. I had, I bought on VWAP. I was using this line too, right here. I drew my line out, and I saw it, and I took some, came up, I sold a little bit, and then I got stopped out for break even. And that's what I mean. I'm taking a starter into these positions. I don't know what the hell's going to happen. I know that there's a high probability that they will definitely spike on me. But I wasn't patient there for that washout. And that's what happens when you're not patient. If you're not patient in the stock market, you will not win. We see this come up and then all the way fall down. There was actually a line right here drawn. You can't see it, but on the chart, there was a line. If you go to SBOT on March 8th, you'll be able to see it. And there we go again. Comes all the way back down, overextended, bought on the dip, selling into those spikes, using VWAP this time as a price target. This was a BPTH trade that I took long. It was probably one of my better trades I've taken in a while. And again, I was recognizing on the candlestick chart, or sorry, the line chart, this little niche right here. And I was really interested in that. So then we had this parabolic spike where we had a stock go from $30 all the way up to 75 in one day. Come all the way back down. I managed to buy the dip on VWAP using this line and sell into this 45 section. I'll show you the trade in just a minute, but these are some things that I was looking for. Number one, I was looking for that resistance. It kind of pulled back, came out, and broke it. We definitely got overextension. I mean, $30 to 75, that's just some crazy action. And then it came back down on VWAP, which I really liked. I saw that VWAP was kind of holding a little bit. I liked how this line was lining up with VWAP. So I took some long and then sold it. And here's what this looked like on candlestick. So this stock, it really overextended, came back down. I had my line drawn out actually perfect. And I wanted to see if it supported because this stock was crazy. It just got unhalted. I didn't know what was going to happen. So again, we see this this buy and then a sell. I bought it at 28 something, I forget, but I sold it into 42. Nice little 50% gainer. This one is also interesting. Seal. It was a seal trade that I made. So I was looking at this line right here, and I was looking for this to kind of line up. Notice how all these lines kind of line up the whole way. They line up the whole way, and that's really what I was looking to buy into. I wanted to see if it was supporting. These two lines happened to line up. So what I do on trades like this that are really crowded, a lot of volume, is I'm just drawing the lines that I think are the most probable for it to bounce. And if it doesn't bounce, then, or hold my line, then I just won't trade it. Like there were certain times here where I could have, you know, I could have bought this level if I wanted to, could have sold into this level, but I'm always watching the tape and I'm always looking. And the tape just comes with screen time, guys. The longer the screen time that you have, the easier it is to start to read it. So again, we got this pop, overextension, washout. I took some long at the 2.7 level, sold into 2.9, sold into $3, sold into 3.3. Then it came back down, a nice little VWAP aligning with the line, buying at 2.9, selling into 3.2, and then I'm just scalping here off these lines pretty much for the rest of time. And then at 3.1, it was starting to look a little bit heavy. It was starting to look like the stock was going to make a wave down, so I got out and I took my gains and walked away. This is another BPTH trade. This was purely scalping off the lines. You can't see it as well, but there was a line here. I was just selling into resistance, buying the bottom, selling, buying bottom, selling, buying VWAP, selling, and here we go again, just buying and selling, buying, selling, buying, selling. Another BPTH trade. Well, this is actually the same one where I'm looking to kind of buy the dip. I was noticing that it was being kind of soaked on the tape a little bit. And another thing, tape reading is really, really crucial. If you can record your screen every day, just do it. You'll get a lot better for sure. So here we go. It kind of dipped. I sold into the spike, came back down, dipped, sold into the spike. Was using this line here, came all the way up. I think it was 7.15, sold at $8.1 a share gain here. And this is actually just recognizing a higher low and just using kind of these lines and watching and just reading the tape. Like I have lines drawn out here I have lines drawn out. I have a line drawn out here. I have a line drawn out here for sure. I have a line drawn out here. And I'm just sitting there watching, seeing what will happen. Does the tape conform to that line, or does the tape say, hey, no, I'm going down a line below? Here we go, another trade. This one was actually on VWAP. I'm sure of it. I don't have VWAP up on the chart, but I was kind of looking. This 1.6 level was kind of an area of interest. I saw this little wick down here. I wanted to see what 1.6, 1.5 did. 1.6 wasn't really broken, so I took some just a starter position and almost made $1 a share on it. Took some at 1.6, sold into 2.4. But again, I'm getting this overextension. I'm getting a pullback. Tape is supporting, coming back up, and selling into this overextension and this wicking action. Notice how these wicks are long. People are selling off a lot more than people are selling off down here. People are starting to sell around the 2.2 level. Then they're really selling up here. Here we go again. Bought off this line right here. Made sure the tape conformed to it. Unfortunately, I didn't have a preset order down there because I wasn't sure what the stock was going to do. The tape washed out, or the stock washed out, and I bought a little bit right here, sold into this spike. It was a decent little gain for me for sure. So now I'm going to talk about finding these lines on the chart and how powerful they actually can be. When you see a stock spike and then you see these little niches, those are my favorite things to trade off of. Those are my favorite lines because no one's looking at them. People are looking at the lines up here. People are looking at the lines up here. People are looking at the lines up here. I'm looking at a little niche down here. That's my edge. I'm looking at this little niche down here no one's looking at, and I'll show you in a second what I mean by that. But I was looking for this first bounce. So I had this niche in my head. It came up and it supported this line, and I could have bought first bounce here, I could have bought first bounce here, but I really wanted to wait and see how my bottom niche was supported right here. And that little guy, after that, it was almost like a pivot, and we got a 50 cent a share move. Here's how I actually traded the stock. So I actually waited till the $3 line. I was waiting for down here. I thought it was going to wash out actually, and then the tape just supported 2.9. So I went in. I took some at 2.9. This is still first bounce strategy. The stock hugely overextended, came down, pop, came down, pop, came down, and this was really my area of interest down over here. I took some, I sold into the spike, and then I just put a stop at break even and said, okay, I'm just going to let it run. I need to be patient. Having those stops in makes you more patient. It gives you security. Because if you're just free falling out in the market, you could have a massive drop like this and be screwed. So having a stop down here, it allows me to be patient. It allows me to kind of take my time. And that's just what I've done. I took it right here, sold in, and then sold into it again. This one, CIFS, this one I took some off this line. It wasn't necessarily overextended. I just bought the pullback. This is more of a first bounce strategy though for you guys. This was more just drawing my lines out, looking at these lines here, these lines down here, and selling just into these overextension. You know, once you get a candle like that, you're gonna get some pullback for sure. That's just usually how it works. And then we got this wash here, and I bought this line right here at 5.25, I think it was. And after that, it actually went parabolic, and 5.25 all the way up to 6.4, over $1 a share gains. So this strategy can make you 50 cents, 30 cents, 20 cents, or it can make you $1 a share. And $1 a share is a nice profit. It's really good if you're willing to put in the time, sit, wait for it to come down, wait for all the chasers to chase it up, wait for all the shorts to start to get bagged. You'll be in the money. It's all about patience, waiting for your lines, and really, really just studying this strategy. Here we go again, another first bounce. Stock kind of came up. I was using the 13 as a guide on this one actually, and I don't always use EMAs. I don't always use the 13. I use whatever the chart conforms to. And here we go again. Stock comes up, hits this line. I sold into the spike. I recognized that there was a lower high. I wanted to leave it. Then I bought off this 6.25 line again. Tape was supporting. Came all the way back up. And that's great to see. This one's kind of a little bit of a wild card for you guys. It's a setup that I've been looking at. It's still kind of overextended, came down. But VWAP was kind of trailing up here. And once it got over VWAP, I think a lot of shorts started to get bagged because a lot of people were shorting down in this area. I'm not sure why, but people were shorting all the way down in kind of this area, and once the stock kind of came up, a lot of shorts down here were trapped. I kind of recognized that, so I took a starter at 7.63. I had a stop at break even, never got hit, and then boom, went all the way up to 9.5. It was a nice gain for sure. But again, I was reading the tape, I was identifying that it wasn't making lower highs. I was using these lines to see if they were breaking, and I was just kind of letting it run. A big part of trading is just letting the stock run, letting the stock do its thing. If you don't give a stock enough time to kind of conform to your thesis, well then you're not going to be able to make money. You need to be extremely patient. You need to wait. You need to be kind of chilled out, and just let it ride. Let whatever happens happens. Have your stops in. That's a big part of trading stocks. So now I've gotten to the conclusion part. And basically a big thing is only trade whatever pattern you know. Just trade your patterns. Kind of whatever pattern it is, observing stocks rather than trading them. I'm not saying go out and bet 10,000 bucks on the first bounce. I'm saying start with 100, 200 shares and just watch how this pattern works. Record the screen. See how it works in real life, because I guarantee you will be able to make money off this strategy as long as you are patient and you will wait for your lines. It's like fishing. I have my lines out. I'm waiting for them to come down. If they get hit, they get hit. If they don't get hit, then they don't get hit. And that's just life. And another thing is this is a marathon, not a sprint. Everyone wants to get rich quick. Everyone wants to get rich right away. But you have to learn these patterns, and that takes time. So instead of saying, you know what, I'm going to quit my job right now, I'm going full-time right away, make time for these patterns, and you can really see how much of an impact 20 or 30 cents can be on your life. Because sometimes you'll get these little 20, 30 cent, 40 cent bounces, and other times you're getting $1, $2 a share bounce. You know what I mean? So it's really all about trusting what you know and being patient. This whole strategy, longing, shorting, whatever you are, you must be patient. You must go in, have your stops in, and just let it ride, let it run. That's a big part. Taking profits along the way, that's another thing. Always take profits. And another thing, trust your process. Trusting your process is a big thing. Having faith in yourself, that's huge. Always make sure that you trust your own process, because if you don't trust your process, if you don't trust yourself, you're never going to be able to make any money, and you're always going to second guess yourself. And another thing is have fun. Trading can sometimes be stressful, but it is really rewarding. I love trading stocks. It's what I want to do for my whole life. Have fun with it. Enjoy it. It's something that can be rewarding. It takes a lot of work. and a lot of time, but it is really a rewarding and great profession, and I honestly, I highly recommend it. It's something that I love to do, and now I'm kind of in the process of helping other people, and I enjoy that too. You know, I enjoy helping people. So this was my kind of presentation on First Bounce, what I've been doing in the last, 2 months. It's been working for me. I'm not saying go switch your strategy. I'm saying go try it out. It's a great strategy. Thank you, and I hope you guys all have a great day, night, wherever time zone you're watching this from. Cheers, guys.